Hello and welcome back. In our first episode, we laid the foundation. We learned that a K-line is just a story of a battle open high, low, close. But if you look at a real chart right now, it probably doesn't look like a neat story. It looks chaotic. It looks messy. Why? Because the market isn't polite. Sometimes, the price action of today gets completely swallowed up by the price action of yesterday. Look at this chart. See these two? Today's high is lower than yesterday's high, and today's low is higher than yesterday's low. They are overlapping so much that one is literally inside the other. In technical analysis, we call this a K-line inclusion or a containment. And if we try to analyze the market with these messy, overlapping lines, we get mixed signals. It's like trying to see a road while looking through a muddy windshield. Today, we aren't trading. We are cleaning the raw data. We are washing the windshield. So, how do we clean this up? We don't just delete the bar, we merge them. We combine these two K-lines into one. But there is a catch. The way we merge them depends entirely on the trend that came before them. Are we in an uptrend or are we in a downtrend? If the market is rising, we process the inclusion from a high point perspective. If the market is falling, we process it from a low point perspective. Let's look at the rules. First, the uptrend, or as we call it, upward processing. Imagine we are in a clear uptrend. We see an inclusion. Here is the rule. When processing upwards, we take the higher of the two highs and the higher of the two lows. So, between K-line A and K-line B, we find the highest point and we find the highest low point. We take those two extremes and we draw a new, merged K-line. This new line shows that despite the mess, the bulls are still in control. We are focused on the highs. Now, the downtrend or downward processing. The logic is reversed. If we are in a downtrend and we see an inclusion, we assume the weakness continues. We take the lower of the two lows and the lower of the two highs. We find the lowest point and we find the lowest high point. We merge them. This new K-line emphasizes the selling pressure. This is the mathematical principle of inclusion. It's not about guessing, it's about geometry. Now, you might be thinking, that's simple, but here's where most beginners fail. What happens if you merge two K-lines and that new merged K-line is still overlapping with the next one? You keep going. You treat that newly merged K-line as a standard element, and you compare it to the next one. You keep processing and processing until there are no more inclusions left in this sequence. By the time you are done, you have transformed a messy, chaotic cluster of raw price data into a clean, logical sequence of rising or falling steps. This is the foundation of the entire Zen-style technical analysis system. If you get this wrong, if you process an inclusion in an uptrend, using the downtrend rules, your trend line will be wrong. Your support and resistance will be wrong. Everything downstream will be built on sand. So, your homework is simple. Look at any chart, find an inclusion, determine the short-term trend before it, and merge it manually. Next time, we will take these clean processed K-lines and look for the ultimate signal, the top and bottom patterns. 分型. Until then, clean your data. Chaos is merely order waiting to be deciphered. Thanks for watching. See you in the next episode.